Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are responding to the reopening of the economy. And Phil, while stocks traded higher for the week of August 3rd, it appears that there's a lot more fear in trading than the volatility term seems to support. So first, let's take a look at how the week ended for August 3rd.
Yeah, I mean, it was a pretty positive week with the stock market just gradually grinding higher on relatively good news, and not great news because unemployment came in way less bad than expected at 10.2%. The COVID cases in the Southwest states looked like they started to peak and are now coming down. And earnings was coming through better than the bad expectations we've talked about before as well. So there was a fairly persistent beat of, small positive surprises last week, and the market marched up pretty much day after day as well, on that news.
If we take a look at our next slide here with the COVID-19 data update, it looks as if the U.S. is downturning a bit, which is encouraging, but Latin America a little bit concerning.
It's kind of interesting looking at this chart, isn't it? I mean, we sort of back out and look at the whole world, and actually America might look good at the moment because we are starting to get what looks like a second wave, but really is just the spread around the southwestern states under control. Where you compare that to Latin America, it's now the line at the very top in pink there has the most new cases per day. Clearly, they haven't got the spike in cases under control at all. But then you also look at emerging markets, Asia, and India in particular, and they're still on the exponential growth path, really. They haven't even got the curve to slow that much. So a lot of the emerging markets are really struggling to get COVID under control. They have a significant number of new cases. And also down the bottom, you can see that in Europe and in Australia, we've got a spike in cases coming from a second wave. So that dark blue line shows that it's really hard to get coronavirus under control and keep it under control. Spain has quite a lot of new cases now. And so it just highlights how difficult this is going to be until we get to a vaccine to get everyone back to work safely and get the economies all chugging along properly for a longer period of time.
And if we take a look at our ETF fund flows for the week, still seeing precious metals at the top, silver, the number one spot.
Yeah, but less precious metals than we've seen the last couple of weeks. And a couple of weeks ago when we did this, it was almost all precious metals in the top 20. So now you've got a bunch of tickers that are silver, gold, miners, platinum. Clearly, a lot of people are getting into that trade with gold getting back to all-time highs. It's kind of stalled a little bit, but silver's had even better performance year to date than gold. So those two precious metals, people obviously with a fear trade going on are starting to put money into the metals, but less aggressively, I guess you'd say, than some of the other trades that are starting to creep back into our top 25 list. So a lot of the ETFs that we've talked about for months now, really, the COVID trade, the online retail. This week we've got esports in there. You've got the innovation funds and some tech ETFs in there. So a lot of people looking at sort of the new economy stocks. You've also got some clean energy coming in, which is really interesting because there's been some press on clean energy and ESG indexes, but it actually seems to be leading to some inflows into those ETFs as well. And then finally, I think a trend that's in here is small cap was to buy last week, and small cap outperformed large cap, which is potentially a bit of a catch-up trade happening because small cap is still 5% below start of year levels, whereas a lot of the other indexes are above start of year levels, potentially close to all-time highs. But the small cap trade looked like it was something that was spread across quite a few of the different ETFs in there last week.
All right, so let's wrap up with volume and volatility because traditionally volumes tend to slow down in the summer, especially when you get out of the July earnings period, but they really haven't been as slow. What are you seeing there in terms of volume and realized volatility?
Yeah, I mean, even bigger picture, people talk about selling in May and going away, so we all have our summer holidays, and the volumes typically in Q3 are significantly down on the year-long average. But this year, it's completely different, and for obvious reasons, all the things we've been talking about, coronavirus, but also the election, the stimulus money, the monetary responses. Before we hit coronavirus, you can see we're trading around about 7 or 8 billion shares a day. When everybody shut down businesses and we had the big quarantine in March, we saw a spike to 18, 19 billion shares a day. So huge increase in volumes. The color bars in that chart show the intensity of up and down returns. And so you can see the market was quite volatile with big realized gains and losses in that period, which we all remember. But as things have calmed back down on the coronavirus front, you can see that the volumes have kind of come down, but only to about 10 or 11 billion shares a day. So there is elevated trading in the market still this long after the shutdowns from March. But what's interesting is kind of aligning that to what's happened to spreads. So spreads and volatility tend to work together. When volatility spikes, it's much more difficult for a market maker to provide a spread and capture a spread, so spreads tend to widen. We've seen spreads come back down. We've seen volatility come back down, and the realized volatility, which are the blue lines in that vol chart, are back down pretty close to pre-coronavirus levels. And you can see that from what we've been talking about day after day, relatively slow, small moves in the actual market returns, but the VIX futures, which are forward-looking, are still pricing in a lot of risk, and that aligns with the fact that we've still got an elevated amount of volume trading as well. So I think traders are definitely still focused on what the risks are ahead for us, and there's definitely a lot to look at, including the election in less than 100 days now.
All right, it should be interesting. Less than 3 months ahead. So thanks so much for joining us on Trade Talk.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.